Right, Assalamualaikum warahmatullahi wabarakatuh. Right, so this is the answer for July 2023, question 1 for MFRS 101, financial statement. Okay, so we proceed with the question. All right, so first we go through the question. Right, so normal with same with other question. The question will give you trial balance. All right, so this question they mentioned incorporated in 1st January 2010. Right, so but if you look at the question, all right, so if you look at the question, if you look at the what the question asks you actually, it is for financial statement at 31st December 2022. Right. So therefore, we can know that this accounting period for this question is focused from 1st of January 2022 until 31st of December 2022. All right. So that is the period for this question. Right. So another thing to highlight is the question did mention authorized capital, which is 150 million on each share for 1 ringgit each. Right. So the reason why the question mentioned this is because this is for us to calculate the EPS, earning per share. The number of share is mentioned at 1 ringgit each, but we are not using the authorized capital. All right. Authorized capital is total number of share, total number of share, the maximum that the company can issue. However, in this company, you can see at this ordinary share capital here, it is only 120 million. So the reason why the question gives us this information, because the question want us to know that each share value at 1 ringgit. So therefore, if we have 120 million value of share, we divide by RM1. So we know that we have a 120 million number of share, right? So this is for us to calculate earning per share later, all right? So other than this, the question also mentioned that they have a preference share, a cumulative. This one is also authorized. Never mind. We just focus on the one that the question give us, the cumulative one. All right. So we go to additional information number 1. All right. Again, this is the trial balance given by the question. It should be balanced. Right, so this is additional information number 1. Right, so as we go through this additional information number 1, the building has been revalued to 38 million on 1st of January 2020. All right, so remember our period is 1st of January 2022 to 31st of December 2022. All right, so this revaluation is happened in 2020, mean that it is happened before this period. Right. So in other words, actually resulting in a surplus of 12 million. What does it mean? Mean that previously the company already revalue the building and have a surplus, which mean in company ARR, asset revaluation reserve, it is included this 12 million, right? So other than this, the question also mentioned the remaining useful life was 40 years. All right. So as on 31st December 2022, the building then revalued to 40.5 million. So now 31st December 2022, now. All right, now the date that we want to do the financial statement. All right. So the director also decided to uh revalue the line. Now I change color to green color to differentiate between building and land. So the revalue for land is 147 million. All right. The previous revaluation for land has a surplus also for 5 million. The company adopt revaluation model for land and building. So now we know both of building and land previously has already revalued and has a surplus which is recorded in asset revaluation reserve by the value given in this question, right? So mean that if this year or this time they have a deficit, they need to utilize the surplus first before they can put in statement of profit or loss, right? So as for this, how we are going to treat this, right? Remember, this is adjustment, okay. I show you part of this adjustment. All right, so for building, okay, the first one we focus on building first. What should we do? All right, so the building is revalued on 31st December 2022. In other words, this is end of the year, because it is happened at the end of the year and the building has a useful life. okay, has a useful life. Therefore, we need to calculate the current year depreciation. Okay, different from the question that we did previously. If the revaluation is happened at the beginning of the date or at the beginning of the period, no need for us to do a depreciation first, right? But now in this question, the revaluation is happened at the end of the year. Therefore, we need to calculate the current year depreciation. Okay, 38 million divided by 40, then we get 950,000, right? So therefore, the carrying amount for building for this current year will be 38 million less with 3 million. How do I get this 3 million? Okay, 3 million is get from this accumulated depreciation. Accumulated depreciation for the building, you can see here it is 3 million. All right, 3 million plus with the current year depreciation. So now we get the carrying amount as at 31st December 2022 at 34.05 million, right? So basically this 34.05 million, we are going to revalue to this figure 40.5 million. So therefore, what should we do? Okay, therefore, the difference. All right, so first thing first, because we have a depreciation, we need to record the depreciation. So debit depreciation, credit accumulated depreciation by 950 and 950. So, so now, where should we put this depreciation? Again, this working, not really you are going to show me examiner, but it's better for you to put inside the question. Let's say if this is the question, you say debit depreciation, credit accumulated depreciation. Yeah, so therefore the credit accumulated depreciation mean that the accumulated depreciation for building is increased. So I highlight here in the question, you can see it is plus 0.95 million, which is it is 950,000, right? So another one, depreciation, of course, depreciation is not here yet because this information is actually a trial balance. All right. So the depreciation is additional. So I put at the bottom of the trial balance. Okay. So other than this, what happened? Okay. Other than this, we revalue. So when we are going to revalue, we compare the carrying amount, which is what we calculated just now, 34.05 million, compare it the fair value, which is 40.5 million. So you can see here, there is a surplus by 6.45 million. All right. So where should we put this surplus 6.45 million? All right. So as mentioned by the question, you can see previously they have a surplus by 12 million. Now they still have another surplus. So is there any issue? No issue. So all surplus are going to go to asset revaluation reserve. So building are going to increase by 6.45 million and the asset revaluation reserve are also going to increase by 6.45 million. What else should we do? All right, because this is a revaluation, remember we need to eliminate the accumulated depreciation. How much accumulated depreciation should we eliminate? At this date, our accumulated depreciation is, you can see here, it is already at with 0.95, right? So 3 million add with 0.95, so you get a 3.95 million. So therefore, you eliminate whole 3.95 million, 3.95 million. So what happened here? Accumulated depreciation, you are going to minus. All right, so accumulated depreciation, you are going to minus by 0.95, minus, right? And the building also are going to minus by 3.95 million. Okay, 3.95 million accumulated depreciation minus 3.95 million. A building value also minus. All right. Other than this, the building also increased by 6.45 million. The building also increased by 6.45 million. And asset revaluation reserve also going to increase by 6.45 million. All right. Okay, that's it for building. Okay, we proceed. All right. So the next part for us to do is for land. So what happened for land here? All right. So as at 31st December 2022. All right. So this is again end of the year, but land don't have any depreciation. So we just compare the fair value with the carrying value. So we can see here there is a deficit. However, for land, it is been revalued before and has a surplus by 5 million. All right. So because they have a surplus by 5 million here, you see, the deficit should be 7 million. Because they have a surplus by 5 million, all right, previously got ARR by 5 million. So we fully utilize this ARR first. So therefore, we debit ARR until all these 5 million are finished. And then the remaining, we put it in deficit, which is in our statement of profit or loss by only 2 million. All right, so we credit the line by 7 million. All right, so again, the one I highlight here, the notes here, the one that impact ARR only show in other comprehensive income. Later I show you in the full answer later. Right. So what happened here? What happened to your ARR? ARR debit. Mean that ARR are going to decrease, right? Deficit is extra information and land are going to decrease. So what happened here? Again, ARR are going to decrease minus by 5 million. Okay. Deficit, where should we put? We don't have information here. So I put it here, down here, deficit 2 million. All right. And land are going to decrease by 7 million. Land are going to decrease by 7 million. All right. So that's it for information number one. Right. For information number two, okay, so we have information for investment property value at 1.5 million mistakenly included in the inventory. So as we can see in this question, if you go through this trial balance, you cannot find any investment property because by these notes actually, all investment property, they already put inside this inventory actually. So that's why they don't have the information on investment property. Right. So therefore, in this case, the fair value of investment property was 2 million. Okay, the 1.5 million, when it is revalue, it is 2 million. All right. So the company adopt a fair value model for investment property. Okay, never mind. All right. So we proceed first. First thing first, we need to correct this error. All right. So how should we correct this error? We increase our investment property. We create this investment property because we don't have investment property, right? So we create investment property. Next, we need to decrease our inventory. Remember, inventory is asset. When to decrease inventory, we put on credit side, right? So therefore, the adjustment is investment property. We increase by 1.5 million and inventory, we decrease it by 1.5 million. Okay, plus minus is balanced line. All right. So next, the question also mentioned the fair value of this 1.5 million, or for this 1.5 million, not the whole. The whole is 50 million plus 1.5 million, right? So it's not the whole is only 2 million. This one, 1.5 million is only 2 million. 1.5 million is revalued to 2 million, right? So therefore, in this case, carrying amount is 1.5 million. The fair value is 2 million. So therefore, there is a gain on investment property by 0.5 million, 0.5 million. So you can see here. So we debit investment property, meaning that our investment property are going to increase by 0.5 million. I put it here, 0.5 million increase. And what else? Gain on investment property, which is we put under statement of profit or loss. So gain on investment property, put under statement of profit or loss. This one, we don't have information in the trial balance. So therefore, I just put it at the bottom. Again, all the bottom information is the information that is not yet included in the trial balance. Right. So the next one. Right. On 1st of January 2022, okay, one of the equipment was disposed at a fair value of 7 million. All right. So now 1st of January is the beginning of the period. All right. So disposed at the fair value of 7 million, immediately lease back for a 4 year term. All right. So now this part is very important. Okay. It is sales and lease back. Okay. It is sales and lease back. Right. So again, the question mentioned payable at the beginning of each year, installment is 1 million. Okay, installment is 1 million. Okay, the cost of the equipment is 6 million and the accumulated depreciation is 2.8 million. Right. Okay, so we proceed again. The first payment was made on 1st of January 2022, meaning that at the beginning of the period. Okay, the payment is made at the beginning of period because it is 1st of January. 1st of January 2022, if you notice, it is at the signage date, at the date of disposal, right? Present value of this of the lease payment is 3.5 million, all right? So now the question gives you a lease payment, a total present value of the lease payment is 3.5 million. Implicit rate is 8%. Okay. Right. So first thing first, again, similar like other situation, if it is a sales and leaseback, we need to decide whether it is a sales and leaseback or not lah, or not sales and leaseback, not. Okay. So uh, again, in this question, the question did not give us the remaining useful life, right? So we assume or we refer to useful life given, which is 10 years. This one you can refer to the notes number 4. This one is note number 3. You can refer to the notes number 4. Okay, if you refer to the notes number 4, it is 10 years. The question mentioned it is 10 years, 10 years useful life. So the lease is 4 years only. Okay, so the lease is 4 years only. So therefore, 4 years out of 10 years is only 40%, right? So if it is 40%, again similar compared to what we did previously, if it is 40% from the perspective of lessor, is it finance lease or is it operating lease? If it is 40%, mean that it is operating lease, right, from the lessor perspective. So therefore, if it is 40%, it is operating lease. At the end, the asset are going to become lessor. They are going to go back to lessor. Remember, in this case, actually, the company leased the asset to other company. So other company as a lessor, they lease back the asset. I mean, first the company sells the asset to other company and then lease it from the other company. So the other company is the lessor and the company that we are doing here is the lessee, right? So therefore, in this case, from the lessor perspective, it is operating lease. Because it is operating lease, at the end, the asset are going to belong to lessor. Because at the end, the asset are going to stay at lessor. So yes, it is sales and leaseback. Okay, it is because the transfer of control, the control is transferred to lessor because at the end the asset will become lessor asset, not the company that we do anymore. All right. So therefore, in this case, yes, it is sales and leaseback. All right. So in this situation, if it is sales and leaseback, what should we do? All right. So if it is sales and leaseback, okay, we should calculate the ROU or right of asset, remember? So now we are doing for this company. This company is a lessee. Lessee have to calculate ROU, right of use asset, right? So under sales and leaseback, lessee have to calculate the right of asset retained and the right of asset right of use asset, right of use asset transferred. Okay, right of use retained and right of use transferred. Okay, because it is sales and leaseback. So how much do we retain and how much actually we transfer? The previous question that we do before this is no, it is not uh, sales and leaseback, right? It is just a borrowing and the asset will become the guarantee. But in this case, yes, it is sales and leaseback, right? So therefore, to help you to do this, to help you to understand this, I provide this table. Okay, so I will explain this table, right? So first thing first, we know that the disposal at 7 million. So the disposal is at 7 million. 7 million disposal. Okay. So this one is the minimum lease payment. Mentioned in the question, minimum lease payment is 3.5 million. Okay, again, this is the fair value. Okay, disposed at the fair value of 7 million. The minimum lease payment is 3.5 million. So the right retain is actually 3.5 million. The right transfer is actually 3.5 million also. How to get this 3.5 million? The one I colored in red here, the total 7 million. Last week, the right retain 3.5 million. Different question might have a different number. Right. So therefore, we have a 3.5 million. From this answer, actually, we can calculate the proportion in percentage. 3.5 million divided by 7 million, we are going to get this 50% and 50%. This why this question is easy because it is 3.5 million, which is half from the fair value, 50% and 50%. Right. So therefore, what else? Okay. Therefore, in this situation, okay, what we need to do is this. Okay. Right. So the carrying amount, okay, the carrying amount, we calculate the carrying amount and the cost of the build equipment is actually a 6 million. The accumulated depreciation is 2.8 million. So 6 million less with 2.8 million. So we are going to get 3.2 million. All right. So from 3.2 million here, Now we can calculate how much the ROU retain and how much the right transfer based on the proportion of percentage that we calculate just now. So the total is 3.2 million, right? The carrying amount total is 3.2 million. 50% will become a right of use asset, and another 50% is actually the right transfer. Right. So the one that we can record as our ROU, right of use, is only this 1.6 million only, because this is the ROU that we retain. Okay, this is the value of the asset that we we maintain in our company. That's what I mean by ROU retain. Remember, we sales and we lease back. So we need to calculate how much actually that we retain. The remaining, actually, we transfer the ownership to the lessor or to the other company, right? So therefore, in that case, okay, if it is confirmed, okay, you can refer to the table that I give you before. Therefore, the journal entry will be like this. So debit will be bank 7 million. Why 7 million? Because we sell or we dispose at 7 million. So we are going to get this 7 million. Now we dispose. Remember, we dispose. So we need to eliminate this equipment 6 million and the accumulated depreciation 2.8 million. We need to eliminate because we dispose. What else? Other than that, okay, remember I told you in the table just now, the ROU will be maintained at 1.6 million only, because this is the asset value that we retain based on the total carrying amount of asset. So only this that we retain, so we debit the ROU. So now we record this asset based on this ROU, 1.6 million. Okay, how much we owe to the company? The lease liability. So the total lease liability is 3.5 million. This is what we owe to the other company. All right. So based on all this calculation, you just balance it up and you are going to get the balancing figure, which is in this case, it is on credit side. If it is on credit side, then it is a gain on disposal. So you are going to get 1.9 million credit side. Because it is credit side, it is gain on disposal. Right. What else? Same with the recording of lease actually. So we need to record the payment. So lease payment is how much? 1 million. Mentioned in the question, right? The payment is 1 million. Of course, paid using bank lah. So lease liability are going to decrease. What else? The lease interest. How to calculate the lease interest? Remember, lease interest is calculated based on lease liability, not ROU. So lease liability, our lease is 3.5 million. Why we have to minus with 1 million? Because the 1 million paid at the beginning. 1 million paid at the beginning. So that's why we minus first, right? If it is paid at the end, no need to minus. Just calculate with the percentage. Now it is paid at the beginning. That's why we minus with 1 million first. Then we times with the interest rate 8%. So again, to record interest is debit interest, credit lease liability. Liability increase, expenses also increase. What else? Don't forget, the ROU also need to do a depreciation. So ROU, how do we do a depreciation? We need to choose useful life 10 years or lease term 4 years, whichever is lower. In this case, lease term 4 years. That one is the lower. So we choose 4 years. So 1.6 million. Remember, we use the value right of use 1.6 million divided by 4 years, which is the lease term. So we get the depreciation by debit depreciation 400,000, and credit under our ROU, they don't have accumulated depreciation for ROU. ROU straight away minus with ROU. So we credit straight away our ROU 400,000. So from all this journal entry, I would like to show you in the adjustment in the trial balance. So first thing first, we can see the bank debit 7 million, right? So it is increased lah. So increase 7 million. Next, accumulated depreciation, credit debit 2.8 million. So mean that it is decreased, right? So we decrease, we minus 0.8 million. It is equipment. What else? ROU is 1.6 million. So we create ROU 1.6 million. Don't have. All right. So next, lease liability 3.5 million. We create lease liability 3.5 million. Here, all the working. But first, it is 3.5 million first, right? Next, credit equipment 6 million. So equipment, we go to the equipment, we minus 6 million because it is credit side. And then gain on disposal 1.9 million. Gain on disposal 1.9 million. This one is created a new one. Okay. Next, what else? What else happened here? Right. Next, debit bank. Oh, sorry, credit bank. We paid by 1 million credit bank. And we debit the lease liability. I mean, the lease liability is payment, right? Payment, lease liability is decreasing. You can see here it is minus by 1 million here. Okay. What else? You can see a lease interest 0.2 million and lease liability credit side mean that it is increased by 0.2 million. Okay, again, the first one is created payment 1 million, interest 0.2 million increase. So what else? The depreciation 400,000, depreciation for ROU 400,000 and ROU decrease, right? So ROU is here, right? So I just put it one more, which is minus with 0.4 million of 400,000, right? So that is for the lease. That is for the sales and lease back. If it is happen, we are going to do like this. Okay, the difference compared to the lease that you learned before is this information, this sales and lease back, they got a retained sales and lease back. Retain asset retained and value of asset transferred. The important part is for us to calculate the value of asset retained because that is our ROU. All right. So next, number 4. Okay, number 4 on 1st of July 2022. Remember, our period is 1st of February until 31st of December. So if it is a 1st of July, mean that it is in the middle of the year. So 6 months toward 31st of December. Alright. Cahaya acquire another plant at the cost of 8 million. From Era Furniture Berhad. Right. On the same date, the company also received a government grant. Right. So now this question is on government grant question, amounting to 2 million. Okay, the cost is 8 million, so the government grant is 2 million, right, to purchase the asset. It is the policy of the company to use write-off against asset method. Okay, write-off against asset method. Remember, we got the method for government grant, deferred income method, and write-off against asset method. So now this is using write-off against asset method, right? So it is a straight line basis and monthly basis. So depreciation of all equipment is for 10 years. Again, this information that we used in the list previously, in the previous question, we used this information because we just have this information, right? So the useful life is 10 years, right? So now we do the write-off against asset method. To do a write-off against asset method, I just do a shortcut one. This one is debit plan, 6 million, and credit bank, 6 million. Why 6 million? Because 8 million less with the government grant 2 million. So it is plan 6 million and bank 2 million. Okay, and therefore, what should we do? Plan increase by 6 million, bank decrease by 6 million. All right. Okay, what else should we do? Okay, so again, this is a new plant, so therefore we need to do a depreciation. All right. So again, it is we start purchase on 1st of July. So it is only for 6 months. All right. So the new plant is 6 million. All right. 6 million. The one that we record, this one. Divide by 10 years times weight 6 over 12. We get a 300,000. This one is only for new plant. The existing plant, remember, if you refer here, we have a 15 million existing plant. 15 million existing plant also need to be do a depreciation. So 15 million divided by 10 years, it is 1.5 million. So the total depreciation for a plant is actually a 300,000 plus 1.5 million. So we get 1.8 million. So this is the total depreciation for plant. So we debit depreciation for plant and we credit accumulated depreciation for plant 1.8 million and 1.8 million. So again, depreciation, again, create a new account, depreciation 1.8 million and accumulated depreciation increased by for plant accumulated depreciation increased by 1.8 million. All right. So again, the question also mentioned here, it is not only for plant, right? It is also for equipment, right? So again, we do also for equipment, right? So total equipment is 82 million. All right. So depreciation for equipment Alright, so 82 million less with 6 million. Okay, we can refer here the equipment. Okay, we less with 6 million because at the previous point we we sales and leaseback, right? So we less with 6 million because last point we dispose, divide by 10 years. So we get the depreciation is 7.6 million and 7.6 million. So again, depreciation, accumulated depreciation increased by 7.6 million, and depreciation for equipment is also 7.6 million. All right, so this is information number 4. Then we proceed to information number 5. Okay, so in this information number 5, on 1st December 2022, okay, still within the period, okay, Cahaya Berhad discovered that the payment of 800,000 purchased for a customer list from Anas marketing service was included in the administrative expense. Alright. So again, this is error. Because if we purchase the customer list from outsiders, we can make it our intangible asset. We can make it as our intangible asset. In this case, they did not make it as their intangible asset. They put it in their expenses as administrative expenses. All right. So the purchase was made on 1st of October 2022. Okay, the 1st of December is the one that discover. Right? But the purchase is made on 1st of October 2022. All right, October, 1st of October 2022 until the year end, 31st of December, October, November, December. So it is 3 months, 3 over 12 months. All right, and capitalize the intangible asset are being amortized by 10 years. So in other words, we need to recognize this as intangible asset. So what should we do? We should, in this case, all right, it is an error, so we should record as debit intangible asset 800,000, and we credit admin expense because we want to take it off from administrative expense by 800,000. Right, so intangible asset, we don't have that information in our trial balance, so we create a new one, intangible asset by 800,000, right? And admin expense we minus by 800,000 because it is an error. Right. So again, in addition to this, because now we are having intangible asset, we need to do amortization. So therefore, amortization is only for 3 month period only. All right. So 800,000 divided by 10 years times 3 over 12. So we get debit amortization and credit intangible asset amortization. Don't have accumulated amortization like depreciation. Amortization straight away we minus with the intangible asset. Therefore, amortization is increased. Okay, amortization is increased by 20,000. Again, amortization, it is put inside the administrative expense. That's why I put it there as a add-on to the administrative expense. And we minus from the intangible asset by 20,000, because the amortization is only 20,000. Right. So the last information that we have here is the tax charge for the year estimated to be 12.5 million. Again, tax charge is expenses. It's not the one that we paid. We paid is here. The paid is 4.5 million. The charge is 12.5 million. Right? So in this question, again, I use the same format that I show you in class, this format. So from this information, or this information, we have a tax recoverable at the beginning. Okay, tax recoverable at the beginning. So I just put it here at 3 million. 3 million here. Just put it, just pick and plug only. Right. Then we have a tax paid for 4.5 million. Right. Tax paid for 4.5 million. Put it there. All right. So then we just balance the account and we get the balancing figure as tax payable ending balance 5 million. All right. Okay, so once we finish all the working, so you can see here we have all the information. You see, I already canceled the tax receivable and tax paid because we used this information in the last point just now. Okay, for to calculate the tax payable just now. Okay, so we start our answer. This one is just we want to answer line. We start our answer with statement of profit or loss and other comprehensive income for the year ended 31st December 2022. All right. So for this information, first thing first, we just take it revenue 460,362. Right. This one is no adjustment from the revenue. I just cancel and put it here. No adjustment. after revenue is cost of sales. Also no adjustment, just pick and plug. Okay, revenue less with cost of sales, we get a gross profit. Okay, done. Get a gross profit. Then what should we do? After we get a gross profit, okay, this is other income. Okay, again it is option. You can calculate other income as working at the bottom, or I just do like this, right? I just show other income one by one in the statement of profit or loss here. All right. So other income that we have in this question is first the rental income. Okay, rental income from the question, rental income from investment property. You can see it is on the credit side because this income cancel, put it here, no adjustment. What else? Gain from investment property. Again, you refer to here or normal income. Then you go to the additional information that we have here. Gain from investment property, 500,000, cancel, done, put it here. What else do we have here? Gain on sales of equipment. Then gain on disposal here, 1.9 million here. Okay, cancel. Once we put it, we cancel. Okay, what else? Is there any more gain? No, no more gain. But if you notice, you have a dividend income. Dividend income also you can put it here, but I don't want to put here. I will put at the interest because dividend income is because of the investing, right? Investing and financing, right? All right. So it is a bit different from the operating income. Okay. All right. So other than that, I less with administrative expense and selling expense. Okay. First thing first, because there is a lot of adjustment for these two expenses, we need to do a working. Okay, so this is a working. I put it down here as a working. All right. So first thing first, I just take it from the question. You see there? I just take it from the question. All the information, 34.5 million, 27.1 million, and finance cost 8.9 million. Just do all these three to make it easy lah. After I take from the trial balance, I cancel. You can see administrative expense, we have 800,000 and 20,000. Again, I put it here, straight away put here as error, or which is go to intangible asset by 800,000 and the amortization 20,000. That's why we plus here, right? Okay. So administrative expense done. Then what else? Uh, Selling and distribution, I cancel. Again, selling and distribution is cancelled to 27.1 million. And the finance cost, we look for finance cost, we cancel. Yeah, finance costs here also cancel, but 8.9 million. Okay, done. We cancel. Once we put it here, we cancel. And then we see what is the adjustment that we can do. Right. So what else the adjustment we can do? Most of adjustment in these expenses is additional adjustment down here. Right. So now we can see we have a depreciation, right? Depreciation on building 950,000 here, cancel. Once we put it there. What else? Deficit of revaluation of land by how much? 2 million only, so I cancel 2 million. Next, what else? Uh, uh, okay, what else? Okay, lease interest here, lease interest 0.2 million here. Okay, 200,000. Done. Finance cost, cancel. Okay, what else? Depreciation on ROU here, depreciation on ROU, not ROU, ROU is asset. Depreciation on ROU here is 400,000. Put it here, cancel. What else? We have a depreciation for plant. Depreciation for plant here, 1.8 million, 300,000. The new one plus with the old one, 1.5 million. We get 1.8 million. Cancel. Once we put it, we cancel. What else do we have? Depreciation for equipment. Yes, depreciation for equipment, 7.6 million here. Once we put it, we cancel. Okay. What else do we have? We look for another expenses or no more expenses on debit side. No more expenses. Most of it we cancel already. So we don't have any adjustment for distribution. Only adjustment for admin and finance cost. Then we total up everything. So we have administrative cost, distribution cost, and finance cost. So we just pick this figure, put it in the answer. So minus with 46.47 million and 27.1 million. Right. After we put it these two, again, it is actually a profit from operation. Okay. It is a profit from operation. What else should we do? less with finance cost. This 9.1 million finance cost, right? So less with finance cost. Remember I told you earlier about the dividend income here, 1.5, because this income from the investment, it is different from operation. So I put it here, down here, add dividend income by 1.5 million, right? Okay, and then we get we proceed, and then we are going to get a net profit after we get a dividend income. If we proceed, we are going to get a net profit, right? So again, I proceed with this. Okay, dividend income. After we get the dividend income, we get a profit before taxation. Okay, profit before taxation. Okay, so once we get the profit before taxation, of course, we need to calculate the tax, right? Of course, we need to minus with tax. How much is the tax? Remember the one that we do just now? Tax is the SOPL one, 12.5 million given by the question charge line. That one is tax expenses, 12.5 million. So we minus with tax, then we get a profit after tax, which is 150,292,000. All right, then is it done? Not yet, because again, we need to do other comprehensive income. So how much our other comprehensive income? For other comprehensive income, again, what we need to put inside other comprehensive income is only our movement in our ARR. We see in ARR here, we see there is a movement by negative 5 million and positive 6.45 million. You see, I put here only these two, 6.45 million and negative 5 million. Again, even though the total deficit, if you refer back to the notes, the deficit is actually 7 million, right? Right. But I just do the 5 million only deficit there. All right. Because we have only 5 million surplus from the question information. We have only ARR by 5 million. That's why the deficit here, we utilize this 5 million only. The other 2 million, we minus from the asset value. Okay, the other 2 million will minus from the asset value, which is the land just now, right? Okay, so again, this other comprehensive income just to show you the movement of ARR. So the total comprehensive income is actually 116,742. All right, okay, is it done? Remember, the last one you need to do for this subject is calculate the earning per share. So for calculation of earning per share, how should we do? Okay, guys. So for earning per share, we just do a basic earning per share only, right? So again, we calculate the preference dividend. Even though you see here, there is a cumulative preference dividend paid, but this is paid. We don't want to know the paid. We want to know the expense part. I mean, the dividend that we need to pay. How much dividend that we need to pay? If you refer to this question, the preference share is actually at 10%. 10% times with 40 million, 10% times 40 million, it is equal to 4 million. Yeah, so dividend that you need to pay is 4 million, but it is paid by 3.5 million, right? So what happened here is actually the balancing 0.5 million is actually accrued dividend paid. Accrued dividend paid, which is our current liability. Later in our current liability, we need to show this 0.5 million. Right. So how about number of share? I explained to you already in the beginning, right? So the number of share is RM1. You can refer to the title, the first paragraph of the question. So 120 million, 120 million value of share divided by 1 ringgit. So we get 120 million number of share. So by right, we have these two information. Okay, net profit, remember I told you net profit, not total comprehensive income. We use profit after tax or net profit, 150,292,000 less with preferred dividend, 4 million, divided by 120,000, which is 120 million, which is a number of share. Yeah. All right. And you are going to get 0.93. So the EPS earning per share is 0.93 cent per share. Okay. So the investor are entitled for 0.93% share for us. So sorry, the investor are entitled for 0.93 cent profit for each share that they hold. Okay, for each share that they hold, they're entitled for 0.93 cent. Right. Next, we proceed with the statement of changes in equity or SOCI. Okay, in the SOCI here, yeah, we just proceed. I already share we just do a table on the share, preference share, and ARR, and return earning. Again, I just take it from the question, right? So again, guys, as I mentioned before, once you take this figure, you can just cancel preference share, ARR, return earning. So you take this feature, cancel, ARR, cancel. But remember, ARR got this adjustment, right? So I just put here the adjustment 6.45 million and 5 million negative, right? And return earning cancel. So return earning cancel. Once we put everything, we cancel. What else? Next, what we need to do is we put the net profit for the year. Remember, again, we use net profit, not comprehensive profit. Net profit is 115 million 292,000. Okay. So then again, we calculate the dividend. Dividend given for interim dividend is 8 million. There is no information on dividend, how much dividend should pay and everything. No, right? So we just take 8 million, done, cancel. And interim dividend, 4 million here. We know again the information is 4 million. As what we should pay is 4 million, right? So we record as 4 million, right? So now we get all this total. These total are the one that we are going to use in our statement of financial position after this. All right. So before we proceed with statement of financial position, again, before we proceed with statement of financial position, first I would like to do the notes to the accounts, which is the PPE, right? So in the PPE, what we need to do is we need to have this cost for land, building, equipment, and plant. All right. I just take it as a cost here. So you can see from the question, for this, I do column by column. So again, land, I take it here, 154 million here, but land have adjustment 7 million here. Again, I do column by column here. So adjustment 7 million is because of deficit 7 million here. And we get a cost 157 million. So land don't have any accumulated depreciation. This question also don't have any accumulated impairment loss. So that's why I did not show you accumulated impairment loss here. So we just have cost, accumulated depreciation, and the carrying value. Done. All right. For building, 38 million. So we get the building 38 million here. But you see there is an adjustment, add and minus. So again, we do the adjustment, add a surplus 6.45 million and minus an elimination 3.95 million. Okay, now we get a cost by 40.5 million. So building done, cancel. Okay, next for building, the accumulated depreciation here, you can see the accumulated depreciation here. You can see for building, it is increased 3 million, increased by 0.5 million, minus with 3.95 million, right? So again, we just repeat, we just do what we do here. The beginning balance 3 million, beginning balance 3 million. The current year depreciation 950,000, but we eliminate all because it is revalued at the end of the period. So that's why we eliminate all 3.95 million. So we get a total of 40.5 million. Then cancel. Okay, done, cancel, done, cancel. Next, equipment. The cost is 82 million, but again have adjustment by 6 million. Okay, adjustment is 6 million. So we get a cost of for 76 million. Once we record, cancel. Okay, cancel, right? Next, accumulated depreciation for equipment. You can see here, the original one is 16.4 million. Okay, 16.4 million. Add with 7.6 million, the current year depreciation. Minus with 2.8 million. Minus with 2.8 million because of the elimination, right? And then you total up, you get the accumulated depreciation is 21.2 million. So cost less with accumulated depreciation, then we get 54.8 million as the carrying value. Done. Cancel. Okay, done. Cancel. Next, for plant, the cost is 15 million, but there is additional by 6 million. So again, addition 6 million. Plus with original cost, it is 21 million. Then, for accumulated depreciation for the plant, it is originally 1.5 million. The new one is 1.8 million. So again, we do 1.5 million. The new one, 1.8 million. Total up, it is 3.3 million. So plant, done, cancel. So we get a 17.7 million. All right. Total up all of these, and then you are going to get a total PPE, which is 260 million. Total PPE is very important because this one is the one that you are going to use in the statement of financial position. Now we proceed to statement of financial position. The first one we do is 260 million. This one is from the previous notes to the account, PPE, right? Okay, notes to the account, PPE, 260 million. Okay, by right now, you can see most of information you cancel already, right? So the one that you haven't cancelled is the one that you need to put it here inside your statement of financial position. Right. So therefore, inside this statement of financial position, PPE done. So we do a right of use asset, right of use asset 1.6 million, 1.6 million less with 0.4 million here. So we get 1.2 million, cancel. Once we put it, cancel. What else we have? Intangible asset. Okay, sorry, investment property first. Investment property we have here, investment property, 50 million plus with 0.5 million plus with 1.5 million here. That is the adjustment. So it becomes 52 million. Once we put it, we can sell, right? Next, what else in investment? Yeah, in this question, we have investment, 2.26 million, no adjustment. Just put it here, plug and figure, pick and plug only. Cancel, done. What else do we have here? Intangible asset, this one, 800,000 minus 20,000. So we get 780,000. Once we put it, cancel, get done. Right, so you can total up, or I just proceed with current asset first. Okay, in current asset, what do we have? Okay, first is the inventory here, the adjustment. So we put after adjustment figure 25 million. Once we put it, cancel. Again, you can see a lot of item is already cancelled now. So very few item that you haven't cancelled now. So now it's easier for you to detect the item that haven't been recorded yet, right? So next is I can see here trade receivable. I can see here bank. So there's two more accounts here. So trade receivable, no adjustment, put it there as 24.4 million here. Once put it, cancel. And now we have bank. Bank got adjustment here. We just do adjustment lah. So 12.6 million originals plus 7 million minus 1 million less with 6 million. So it is 12.6 million. You see, that's why easy for us, easy for you to, if you do notes in your question, easy for you to detect what should add or minus. Okay. Once you put it here, cancel. Once you put it here, cancel. You can see here on debit side, all already cancelled. Debit side all already cancelled in the trial balance, right? So by right, mean that all the asset is already recorded. You can refer to additional item that we add down here. There is no asset too. So we total up. So we get a total asset by 397,480,000. All right. Next, equity. We get from Sochi or statement of changes and equity. We just take it from Sochi, put it here. All that, in this question, I total up orange share capital and preference share capital. If you don't want to total up, you do one by one. It's also no problem, right? Right. What else? You can refer to credit side. You can see here trade payable. You can see a bank loan. So two items haven't been cancelled yet. So we do one by one first. Bank loan first, 8 million. Get done. Cancel. What else? Item that haven't been cancelled. One more is lease liability here. So we have a lease liability. For lease liability, remember, some of the lease is non-current liability. Some of the lease is current liability. So the lease is non-current liability is how much? Okay. So how to get this 2.7 million here? You see, 2.7 million is actually after, so this 1 million is the one that we have to pay previously, right? So once we put here, okay, you see, this one, 3.5 million, the adjustment, how to get this 2.7 million is 3.5 million. This one, 3.5 million plus with 0.2 million minus with 1 million. Why do we minus with 1 million? Because we paid 1 million just now, remember? We paid 1 million, that's why we minus 1 million. And then we increase by interest amount, 0.2 million. If you solve this, 3.5 million plus interest 0.2 million minus installment 1 million, you are going to get 2.7 million. All right. So this how we get this 2.7 million. Why should we minus with this 1 million? Because this 1 million is actually our 1 million is the next installment because the payment is the beginning only for us to minus with the interest. Therefore, the current liability will be 1 million for lease liability here. So lease liability here will be 1 million. Okay, the last one that we haven't cancelled is trade payable here. Just put it there as trade payable, 47.1 million. After you put cancel. All right. So total up. Yeah, one more is tax payable. Don't forget this tax payable. The one that we last record here, right? Tax payable 5 million here. All right. So the last one, yeah, once put it, I cancel. The tax payable. All right, so remember this one. Last information, proposed dividend 500,000. Why do we have this information? Remember the one I told you earlier, 0.5 million is accrual. So don't forget about this. So we put as proposed dividend, proposed preferred dividend or accrued preferred dividend, 500,000. So you total up, you're going to get a total a similar balance, which is 397,480,000. All right, so that's all for this question.